Home Depot, number 17 on the list of biggest companies in the US by market cap and the biggest home improvement business on this list. Home Depot is known for the steady dividend, but they also went up 170% to their all-time high since the big drop in March 2020. So, is Home Depot the dividend growth stock you want to own? In this video, I will show you everything you need to know about the Home Depot. I will check the investor presentation, 10K file, fact sheet information, dividends, and in the last part I will tell you if I would buy Home Depot or not. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the companies. So, Home Depot is the home improvement business and the goal is to provide the highest level of service, the broadest selection of products and the most competitive prices. As told in the beginning, Home Depot is the biggest home improvement business in the US by market cap. Right now, Home Depot has 2,300 stores operating in North America. In terms of amount of stores, Home Depot is also the biggest in the US. In this sheet we see the do-it-yourself sales in the United States from 2013 and a prediction to 2025. We see that in 2020 it took a jump because of the coronavirus. A lot of people invested in their home and all the related stores had a huge benefit from it. From 2020 it's increasing steadily again, so this comforts me a lot. We see that there's enough growth in sales, meaning enough room to grow the business of Home Depot. In here we see the Home Depot revenue breakdown on a high level on the left and on the detail level on the right. Starting with the high level, there are three segments: building materials, decor and hard lines. Building materials product line has a wide range of merchandising departments such as building materials, electrical lighting, lumber, millwork and plumbing. Building materials represented 36% revenue share in 2021. Home Decorators collection was merged with the Home Depot as a private brand of the Home Decor in 2017 and is now only offered in the Home Depot locations. Home Depot's decor product line includes appliance, storage, flooring, kitchen and bath, and paint. Decor represents almost 32% of the share revenue in 2021. Home Depot's hardline product line includes hardware, indoor garden, outdoor garden, and tools and represents almost 32% revenue share. All the segments are equally divided in revenue share. This comforts me a lot because you don't want to get all the revenue from one segment. If we check the detailed pie chart on the right, we see that again every segment is equal in terms of revenue share. Same story as with the three high-level segments on the left. Very nice. A very important thing for companies like Home Depot is how the company is growing. Home Depot can get more growth in two ways. One is to open new stores and the other one is to increase the amount of money customers spend in the already existing stores. The best situation is to have both increasing, so opening new stores to increase your market share and the increase of amount of money a customer spends to increase your average ticket. Here we see that Home Depot isn't increasing the amount of stores big time. A few increases per year, so not a lot of growth to get there. In here we see the amount of stores per state. They are the biggest in the US as told before, but there are some states with just a few stores. So maybe some opportunities there to increase the amount of stores. The next thing you want to increase is the average ticket and the sales per retail square foot. We see that both are increasing right now. The average ticket is sitting at $85 in 2022 and in 2021 it was at $75, an increase of 12.4%, which is really looking good to me. The sales per retail square foot is also increasing from 528 in 2021 to 571 in 2022, an increase of almost 8.3%. So Home Depot is growing organically and gets more revenue per customer because the average ticket and sales per retail square foot are increasing. Very nice. This means they not only get new revenue from opening new stores. So now that we know everything about what Home Depot does and what their business is like, it's time to check some fundamentals. But first, let's take a look at the historical performance. Here we see that if you invested $100 back in 2016, you did a better job than the S&P in general and more than doubled your money. It also has to be said that the S&P Retail Index did outperform both Home Depot and the S&P 500 index, so keep that in mind. If we check the 1-year chart, we see that Home Depot made a pretty steady and decent way to the all-time high, but ever since the beginning of 2022 the decline in stock price began. Not because of fundamentals, but because of fear in the market and several other things. On the year-to-date chart, we see that the stock is down roughly 22%, which is quite a lot. The S&P 500 is only down 12%, so they fall down harder than the S&P 500. So this might be an interesting buying area because the stock has come down a lot lately. Let's find out if Home Depot is a buy based on the fundamentals of the company. Home Depot is a 329 billion market cap company with an enterprise value of 373 billion. Right now, Home Depot has a PE ratio of exactly 20, which is very nice. I think for a company like this, you don't want to pay a premium, so with the PE ratio sitting at 20, I think you got a pretty decent deal. The PE ratio came down since the beginning of this year because the stock is down, so that's a benefit you will get. Right now, Home Depot has a profit margin of almost 11%, which is pretty decent for this type of company. The operating margin is at 15%, also fine by me. You want these numbers to be above 10%. But it has to be said, it also depends on the sector the company is operating in. Return on assets is sitting at 20% and the return on equity is sitting at more than 2000%. Both fine to me and are also because of the increase in home improvement sales in general in 2020. The revenue of Home Depot is increasing steadily every year. Since 2020 it took a jump. In the beginning of the video we saw that revenue is increasing because of opening new stores and increasing the average ticket sale. The next thing I want to discuss is the balance sheet. We see that Home Depot has a total cash of $2.34 billion and a total debt of $46 billion. According to these numbers, the debt is too high. Companies use debt to grow their business, but it should always be at a healthy level. The current ratio is sitting at 1, which is fine by me. You want this number to be between 1 and 2, but it also depends on the type of company. For now I think it's okay. The operating cash flow is sitting at 16 billion and the leverage-free cash flow is sitting at 11 billion. You want this number to be increasing every year because free cash flow is used to pay dividends, buy back shares, do acquisitions, pay down debt and several other things. It's really important to a company to have an increasing cash flow so they can do all these activities. Another really important things are the shares outstanding. You want this number to be increasing every year because less shares outstanding means a higher EPS in general, and this attracts other investors. With less shares available, the stock price will go up. Another great thing about decreasing shares outstanding is that the total amount of dividends that need to be paid is less. This leads to maintaining and increasing dividends more easily. We see that the shares outstanding are decreasing very nice and steady. This comforts me a lot. If we check the dividends, we see that Home Depot pays a 2.4% dividend yield and an annual payout of $7.6 a share. The payout ratio is sitting at 44%, which is very nice. Enough room to grow. The 5-year growth rate of the dividends is sitting at 18%, which is very nice. You want them to increase the dividends at a steady pace, which they do for 13 years in a row. Back in 2017, Home Depot paid a $0.89 per quarter. Right now they pay a $1.9 per quarter, a big increasement over the past years and more than doubled in 5 years. The last thing I want to talk about is the biggest competitor of Home Depot, which is Lowe's company. I do own shares of Lowe's and I will definitely make a video about them very soon. For now, I will just show you the main fundamentals so you can compare them on a high level by yourself. Lowe's is a 153 billion market cap company with a PE ratio of 18, which is a bit lower than Home Depot, roughly 20%. Lowe's got an operating margin of 12.5% and a profit margin of almost 9%, which is lower compared to Home Depot. Profit margin is very important, so Home Depot does a good job there. Lowe's has a total cash of 1.4 billion and a total debt of 29 billion. The operating cash flow is sitting at 10 billion. Leverage-free cash flow is sitting at almost 7 billion. So similar situation as we saw with Home Depot, no winner here. Lowe's has an increasing revenue, same story as with Home Depot. Both took a big jump in 2020. Lowe has a 1.44% dividend yield and pays a $3.2 a year in dividends. They have increased the dividends for 47 years in a row, and the last 3-year dividend growth rate is sitting at 16%. Lowe has a payout ratio of 26. So my conclusion is that Home Depot is a really nice company which is steady and recession proof and also at a good valuation. With the PE ratio sitting at 20 for this company, I think you score a pretty decent deal. A lot of companies which aren't as steady as Home Depot are trading for a premium. Home Depot, not. We also see that it's expected that the home improvement sales will grow in the coming years, so all the reason to feel more comfortable with owning a Home Depot. The revenue is increasing at a steady pace and also very diversified, as we saw earlier in this video. They buy back shares and increase the dividends every year. Currently, I don't own any shares of Home Depot, but I think this one is a buy for me right now. I have to say that you don't want to pay a premium for this one. So as long as it sits under $340, I think you score a pretty decent deal. Keep those dividends coming and let the stock price also go up. Right now I do own shares of Lowe's, but I think I will definitely buy some shares of Home Depot as well, very soon. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.